welcome to Capital Discussions Trading Group 2. Today is Bastille Day in France. It's like their 4th of July. It's July 14th, 2015. So Tom and I were just talking about the Greek situation. So if anybody else has any thoughts, chime in. You know, we had, like Tom was saying, a pretty good drop in volatility. And I can pull up my charts if anybody wants to take a look at it.
Tom, did they have to vote on that tomorrow in the Greek Congress Parliament?
The Parliament? Yeah, I don't know what day. Is it tomorrow they're voting?
I thought it was.
Yeah, I thought it was Wednesday also, yeah.
Yeah, it could be. Here's our volatility. So yeah, it really dropped down, like you said, like a rock.
Yeah, look at RVX also. RVX looks like that. It went from 22 to 14 in like 3 days. Just crazy.
Yeah, there's RVX. Bam. So did that help or hurt the M3 traders in the crowd?
Oh, I think it helped a ton on my positions.
Yeah,
it helped a ton on my positions, yeah.
It was the fact that my long puts in the money were, you know, kind of sitting in a precarious place. But honestly, over the weekend, I really felt like, you know, there was an equal chance that there would be another downside move. You know, I couldn't go flat delta or even, you know, leave it too. You know, I wanted to be somewhere in between. I think I was short 500 delta, and you know, maybe by the end of the day, Friday, short 300 delta. But the volatility came out of my long puts. The position was very vulnerable to that, you know. And I was traveling Friday. I was driving from Nashville to Ponte Vedra, and you know, I was okay with it because I wanted to leave the short delta for Monday, you know, in case they didn't get anything together, in case it was further chaos. So yeah, I got thumped. I'm gonna, you know, probably break even on this trade. You know, it was up maybe $5 or $6 grand at some point last week on an up day. You know, so I think it's just a matter of what gamble are you willing to take. You know, I'm willing to lose $2 or $3 grand on this trade, and I couldn't get out Friday because I was otherwise occupied.
Well, Curtis or Tom, you want to show us what's going on with your M3s or your trades?
Yeah, I can show you how bad it is for sure. You know,
okay.
This is going to be one of those examples where it's not pretty.
Well, those are the ones we usually learn the most on, isn't it?
It is. Well, I don't know that I would learn anything necessarily. It's just a matter of the thing being, you know, absolutely the worst possible moment for it to go up 40 points, you know. We're at 1272. I'm out here, so I'm down 2,200. Would like, you know, even if it comes back 10 points, I'll probably get out. I have a couple of end of day type of adjustments. You know, I might bring in these, sell this credit spread, or I might, well, let me show you the position. So I've got my long puts are 20 contracts at 1280 and 10 contracts at 1270. So what I'm anticipating doing is either pulling down these 1270s to 1250, you know, just to get rid of some short delta, or what was I going to do there? You know, I can pull these 20s up. Then I have downside exposure below 1265. Still might do that. And, you know, the theoretical pricing is showing that I'm in, you know, that I will have a decent profit whenever the theta comes out, you know, because my experience with this is, and this is not a technical opinion, this is just an experience that we will move up into this area as Wednesday and Thursday play out. And we're way up here in this area again, which is kind of a low volume area. The volume profile. So 20 days, you know, we're up in here. So it's either going to move up here or it's going to move back down into here at some point. So, you know, up here is bad. You know, 1280 is going to be ugly. But if I move those 20 shorts up 20 or 30 points, you know, that's probably what I'll do this afternoon. It's a fairly simple adjustment. And I did experiment briefly with, you know, just adding a call butterfly.
So I was going to ask you, had you considered treating this like a rock trade?
Yes, I have. There's a, you see, I think I put it at 1270. Something like this. You know, and it's going to take, for significant protection, it's going to take about 20 contracts, and it moves the margin up considerably. It moves the margin up about 30 grand. What do you think, Tom? Do you like the butterfly better or the roll? Credit spread.
I was trying to get some credit spreads filled earlier, and the fills were awful. So in default of doing credit spreads, what I did in one of my positions is I actually took off a few of my lower butterflies to correct my delta.
Yeah.
And on one other position, I'm looking at, instead of rolling the shorts up, I'm actually looking at basically taking and selling off a put credit spread, selling off a long put and buying back my shorts. It's basically half the butterfly, one of my other positions. So I was trying to get some. I filled a few. I did a few rolls yesterday near the end of the day, but again, the pricing wasn't great, so I didn't get everything rolled up that I wanted, which was okay, because this morning I actually made some additional adjustments when the rut was down a point or two. Of course, now it's up 6 or 7 points, so I was fortunate that I did that. But yeah, I just was watching the pricing on these and trying to get filled anywhere. The mid was pretty stable, but I wasn't getting hit 10, 15 cents below the mid on some like 1220, 1240 put spreads. They just weren't hitting them. So
really?
I took another path, and I was able to get some of the butterflies sold off, the lower butterflies, to correct. I'm still inside the tent, so that's a little bit different than your position. So that's also why I did it. Being outside the tent, I don't know if I would do that. I think you're almost forced to roll up to try to get some more theta.
Yeah. This is taking off some of the lower butterflies. You know, 601.
Yeah, I decided I was, and I'm already planning that I'm going on vacation in August in the second week, so it's going to be the week before expiration, so 10 days out. So I'm already thinking about rather than staying in these longer, getting out sooner, which is why I also took off some of the butterflies.
Yeah, that call butterfly doesn't look bad. And
No, that looks pretty
this
good.
butterfly just flattens it out. You know,
Yep. Yep.
at 6 to 1, we have, we are at this resistance area here. It's not a major resistance, but, after this run-up, we run up from 42 to 72, so we run up 30 points in 3 trading days or more, actually. Yeah, that's 35 points. So, if we get a little pullback here, I'll get out. If not, I'll just keep banging away, finding some kind of an adjustment that gives me a fighting chance. Anything like that.
Yep.
Yeah, that looks good.
Yeah, just giving myself a chance. I can't really correct the upside at this point. There's no magic bullet for this. It's down $1,000, $1,200. I could get out now. I could also get out now and just remove the risk. I've had a really great year with this trade in the rut. So,
so do a partial exit, close half of it or something.
Well, and that's what this is doing here. I have shorts down at 1220. That I can turn into this butterfly exit down here. And this is what I would prefer to do, just because it takes some risk off the table, like you said. But I can't make this bigger because I don't want to. I only have 20 short 1220s, and I don't want to go, in the black down there and complicate the trade. This is all assuming on all 3 of these adjustments that I can get filled, because like Tom said, if even a credit spread is not filling, it's pretty hard to imagine a butterfly, an unbalanced butterfly filling. But, honestly, the good news is that they tend to fill better at the end of the day. So I will know kind of where I stand. And there may be some, a little bit of hesitation tomorrow morning in the market if Greece is working on this in their parliament. So even a pullback into the mid-60s, even the high 60s would get me out with a profit. And I'll probably make a little bit of money here on a pullback, and that would be fine. What about yours, Tom? Where are you at? Are you in July still, or are you out?
No, I'm out of July. I've made a pretty conscious decision that I'm not staying in expiration week anymore. I've rarely has that paid off for me. It's hurt me way more than I've profited from it. So I was out of everything by last week on all my July. So I just have August on now.
Yeah, I just wanted to show people briefly this SPX 70-day. If you've been following this. This trade got no adjustments. It's a 20 lot at 2050 and 2080 that went on about 55 days. No, it went on at 65 days. I try to do it as close to 70 as I can, but I can't get it to fill a lot of the time. But this saw no adjustments whatsoever, And it's been on a month, and it just, this SPX butterfly with 50 on the top and 60 on the bottom.
You got to justify these things. That's what's frustrating.
Yeah.
Do I want to own this piece of shit for 5 1/4? No. 5 1/4? You're not kidding.
Maybe I do.
But it's a shitty company.
For 5% a month, I would do it.
Storage, basically. So they buy gasoline from a E&P.
Oh. Who is that?
They buy refined gasoline and they sell it to gas stations. They're a wholesaler, essentially. So.
Tom, who is that
They can
talking?
get killed in a backwardated market, though.
Todd.
That's the problem. That's
Do they actually hold inventory?
Yeah, they hold a lot of them. They hedge it, but you can only
Let's
hedge
Todd.
as much as.
Thank you. So anyway, that trade's been working great. I also kind of got my ass saved in my condor, my rut condor, which was puking there for a few days. And that's now probably going to expire. My normal profit in this trade is about $4,000, but this was a condor that I just fought with. I've been pulling off shorts, and I got lucky. I'd been pulling off shorts off of the bottom, the put position, this 1220, 1200. And we were getting right down to this 1220, and I kept pulling off puts. Then when it looked like we were going to go up, I just sold off the extra long puts first, and then yesterday I got this off. I got about half of this off for 35 cents, and that put everything back in a great position. So it's about that.
Good trading on that.
That's what it's all about, Curtis. You have multiple positions on that benefit in different ways, and in the end, you still end up, making out. And that's really, I think, one of the things that's helped me a lot is I try to keep my positions varied, and they respond differently to different markets. And some you struggle with, some you win with easily, and others are in between. So.
Yeah, that's it, buddy. It's, you can't win them all.
Absolutely.
Can't win them all. So I'm okay with all that. Who else is on here? Tom, have you promoted all these people?
Yeah, everybody's promoted.
Jared. Who's Jared? Jared, can you come on for a second? Show us something.
And Jared's not called in.
Right. Just encouraging him to do so.
Yeah.
These are people that I know, that. There's Ray. Ray, what have you got on? Have you got any Julys on, Ray?
Current position is flat to market.
All
Only
right.
position I have is cash.
Flat as you can get.
How did you do with your July, Ray?
Quite nicely.
Good.
Let's see. Give me a moment. I'll look it up. But it was quite nice.
Go ahead and promote Ray, if you would, Tom.
Sure.
Well, there's nothing to... Oh, I'm promoted.
Well, just so if you got it in option view, you could scale back a few days.
No, I don't have it to where I could show it.
Sorry.
I was just going to look up the spreadsheet.
Okay, good. Jared must be at work or something.
So it was 19.61% return, 4,000 profit on 20,000 capital.
What kind of trade was that?
It was a modified rock.
Yeah, baby. Good for you.
That's awesome.
Thank you.
Very nice.
How'd your Julys do, Tom?
I did quite well in July. Everything worked out nicely, and getting out early was the right thing to do because I didn't have to toy with the market last week when it was gyrating.
Right.
I can show you, take a quick look at a couple of my August trades if you'd like.
That'd be great.
Yes,
All right, let me know when you see option view.
I can see it.
Okay. All right, so this is one of my M3s. I put this in BackTrader so you can see what it looked like last week when the rut was at 12:34. This was last Thursday afternoon. This is a 3 tranche, if you will, so I have 3 long calls and 3 sets of butterflies on this position. I started it, let's see when I started this thing. On June 23rd is when I started this, so it's been on for, what, about 3 weeks roughly. And my shorts, I was rolling back because I was originally up around 1250. I rolled some back to 1230, as you can see here, and as of last Thursday, it looked like this. I was okay with this because I had that complementary SPX broken wing butterfly, which was doing very well on the down move, so that was helping to mitigate risk overall in my position. Just jump ahead quickly here the next couple of days and show you what happened. So Friday at the end of the day, rut moved up 17 points. My position looked, graph change size, looked like that. These Greeks were a little wacky right at the end of the day. I didn't quite believe them, so and because it was a 3 tranche butterfly, 140 minus 141 delta is perfectly acceptable anyway, so didn't do anything with it. Into Monday, end of the day. Basically now I'm at break even with up another 13-point move. You would think the negative delta would have hurt, but I had a ton of negative vega, and that's what really I think helped me on this trade. And so it looked like that on Monday, and then yesterday, let's go back to 3. Yeah, today is Tuesday, so I can't go back to. So
Tom, do you have any long calls in that position?
Yeah, let me show you where that. You just can't see them.
Right.
Right there, 1140. All right, so this is the trade as of, it says 11:30 this morning. It's not down quite that much. Of course, also around this time of day, I also find the pricing widens out, so you can't really believe it. So this thing is maybe down a couple $100 right now. I am up around, the deltas seem about right. So per tranche, that's about minus 75 delta. I'm kind of at my limit because I'm getting close to the edge of the tent. So this is one position where I wanted to do some verticals. They're just not filling them. I wasn't happy with what they were giving me. I'm looking at doing this right now to kind of correct things. I think these are the strikes. Just to kind of cut my delta some, keep my theta up, and take off some upside risk, and it would look like this after the adjustment. So this trade's it's okay. There's no problems with it. I'm not overly concerned about it. It's handled the moves well, and one of the things I try not to do is over adjust these. So I'm just sitting patiently, and we'll see where the market is near the end of the day. The rut's already dropped back to under 5.8 on the future, so it's dropping back a little bit. So this pulls back. This is going to be in really good shape, obviously, the way it looks currently. Not going to be any problems with it at all. So that's one of my positions. I'm going to get out of BackTrader here. Let me go live. Okay, so the deltas always do this. When I first load it up, they look a little wacky. Okay, so that same position right now, it's telling live it's down $800. The Greeks look about the same, so it's fine right now. So I'll just sit pat for the time being. I might tweak it a little bit. We'll see, but I'm not going to touch it till later on in the day. And this is the position, Curtis, that I ended up taking off some of my my butterflies that I had at 1220. I'm actually up decent money in this already. Was up about $3 grand. This is a 2 tranche. I use less planned capital than John does. For each tranche, I use 35,000, and so I target 10% profit off 35,000. So this is, and this is a 2 tranche, so this would have 70,000 in planned capital. So this is was up around 5%. And again, knowing my situation, that in a few weeks I'll be away on vacation, and I want to be out of these about 2 weeks before expiration. My adjustments now will be primarily to peel off where it makes sense, just to make it easier to ultimately get out. And
did you put those tranches on at different times? I notice you have, or did you slide up from, or slide down?
Let me take a quick look. Okay, August M3. So the August M3 was put on at 6/29, one tranche, and then another one at 6/30. So 2 different days. I put the first tranche on June 20.
Right, you put the 1240s on first, and then you put on some more at 1220.
Correct, exactly. And I like to do that sometimes if you know, I'm in the mood to do that. And I filled the first one and just decided to wait a day, and I put the second tranche on. Partially, I think also I put on my SPX broken wing at the same time, and if I recall, I just put the bearish component on, which is a lot of times I'll do that. I'll just put the 75-point iron, 75-point wide iron condor on, and then I will put the broken wing on, because the broken wing component is basically flat deltas, where I pick up the negative deltas from the 75-point butterfly itself. So this trade, by the way, before I did the adjustment, you can see the adjustment today here to show you quick what I did. Here it is. Here you can see I 1170, 1220, 1270s. I sold for butterflies. So my deltas before the adjustment were. Let's get a feel for what they looked like. Yeah, they were up around 170-ish. Again, being where it was located, getting near the edge of the tent. 75 delta per tranche, so 150, so I was a little over, and again, I just wanted to trade this a bit conservative, and I just cut it back to around 60 delta per tranche. So this one looks pretty good right now. See how things go here.
Tom, when you put this trade on with butterflies at different strikes, do you have any rules about how far apart or close together those butterflies can be?
Yeah, I typically don't wait a long time. I typically won't wait a week in between doing it. It might be a day or two at most. And I basically treat that other butterfly as what's the best place to position it if it was a new position. And then I basically put it on accordingly. And if there was a massive move and my Greeks were out of whack, I would have to make some additional adjustments. But in this case, they just went on separately, and there was no need to do anything extraordinary. I hate when Ed does that. Extraordinary for the position. So, but no, typically I'll treat them as it's another tranche, and I'll look at those Greeks separately and try to make it look like a good M3. And then that lays over the first M3 that was put on.
Tom, do you have an iron configuration butterfly on in August also?
On the SPX?
Either one, yeah. I know that you use that configuration sometimes. I just wonder how that was faring.
Yeah, they're let me pull them up real quick here, take a look at them. Again, let me just move off it for a second so the Greeks correct themselves. Okay, so this is one of the two I have on. This goes with that the two tranche M3 that I just showed. So this is a 2 tranche SPX broken wing butterfly. You can see what it looks like. I'll show you the T-log in a minute. This one is fine. My deltas are a little high. I'll probably cut these near the end of the day if the market stays up. My kind of rule of thumb on this, and again, it depends upon where this is sitting. If it's underneath the tent, I'll allow a little bit more delta. As we get near the edge, I want to cut it some. And my adjustment on this, oops, what did I just do here? The wrong button. No, it's not doing anything. There we go. My adjustments are typically something like this. I'll either roll up the shorts just to take off some upside risk, or in this case, I might do something like, because again, I want to start peeling trades off. So that adjustment works just as well for me, and I just removed a little bit of the position. So that would get me down to about minus 30 per tranche is what I typically hold as a max when it's sitting at the edge of the tent. And you can see what that looks like. Let me superimpose it so you can see what it looks like. So the superimposed adjustment took off some risk to the upside, flattened things out a little bit to the upside, but I still have plenty of downside protection, which is the primary purpose of this position. So I never want to be in a position where if this reverses, I'm chasing it. Okay, so that's one, and the other one that I have on, which goes with the first M3 that I showed, is doing quite well. This one looks like this, and this one has had some adjustments because when I first put this on, the only thing that and we can look at it because you'll see it's basically what I consider one tranche. It's 3 butterflies. I had put this on as just the bearish component, which would be 75-point wings on the downside, 75-point wings on the upside. So this originally was, these longs were up at 2175, so it was a 2100, 2175, and this was a 2100, 2025 is what it originally looked like. Show you the deal out quick. This guy. So you can see that the trend on June 18th, that's what the position looks like. 2100, 2175 on the calls, 2025, 2100 on the puts. From there, they're just adjustments, and they're typically just vertical adjustments, and I try to take advantage of what the market has given me. The market pulled back, and what I like to do when the market pulls back and this makes money is I actually take off upside risk. So I started moving these long calls from 2175 to 2150 over time, and I ended up recently moving in 2 of the puts. So the risk in this trade now is down to almost nothing. I mean, the upside risk is just a $500. The downside risk now is we're sitting down here at less than 3,000. And when this original position went on, it's a planned capital of 10,000 with that 1-3 lot. So this one looks good. And again, I wanted to keep this one slightly negative delta, which was the reason to start rolling up these puts a little bit, just to give me some additional protection. Because the market at one point, not too many days ago, the SPX was down here, down around 2070.
What's your profit target on this 3 lot?
10 to 15%. So that would be $1,000 to $1,500. It's been doing very well for me this year. The SPX being so range bound, this trade has worked out extremely well. It's been a favorable market for it. But even when I back tested it and traded it through more volatile markets, it holds up pretty well. One of the keys that I found for me when I trade this is I need to make sure I'm doing adjustments that sometimes are counterintuitive to take off risk for any kind of reversal. When I didn't do that is where I've gotten hurt in this trade in the past. So again, the adjustments of rolling in the wings over time to take advantage of the market movement and in essence take off risk is how I typically manage this for the most part.
And that one actually started at 2100, so.
Right, exactly.
Still had a nice, safe T+0, it looks like, even when we were down.
Yeah, it was at the time, it was, SPX was back around here, and that, again, with the position where it was at, there was no impending danger, but I also like to start locking in profit at that point because, I mean, the market has now reversed, 30-some points, and if I hadn't done that, I wouldn't be where I'm at right now.
Yeah, I like that trade because the maximum capital at risk is so low.
Yeah, and my adjustments tend to keep reducing the risk, and that's what I try to do. So even if something goes catastrophically wrong, later on in the position, there's not a lot of capital at risk at that point.
Yeah, and you're rolling things in at less cost than you would have if you set it up as a 50-point wing.
Exactly. That's what I'm looking at. I'm looking at the cost of rolling in that spread, so I'm looking at the cost of doing that. And when I can do it for a couple of bucks and I'm rolling in 25 points, that makes sense to me.
Yeah, that's very cool.
Okay, that's all I got, Tom.
Appreciate it. Let's I guess that would be a reverse Harvey, right?
And that's exactly what it is. Good old Dan's reverse Harvey, which I use a lot.
Are you trading the 25 strikes for liquidity?
That's what I do, and I just try to keep it simple. I mean, you can start doing the 5 and 10s, but I typically don't do that, and it's just a personal preference. Is it the best way to trade it? I don't know, but I like to do it that way. If I get late in the trade and I want to start tweaking it, I sometimes will use the 10-point strikes or something like that, but that's when I'm just kind of winding down the trade and keep locking in profit to see if I can milk it for a little bit more.
Thanks. That was great. Appreciate you sharing.
Absolutely. Anytime.
Andrew, how are your trades coming along?
I'm in the same situation Ray is. I'm out of everything, and actually I was going to ask the group what they thought about putting on something in July. I'm sitting here and watching the Russell rally. If it continues to rally the next few days and it gets high enough, I might take a shot on a bearish butterfly or a rock. Otherwise, I guess it'll be an M3. But I want to wait until we're closer to 30 days to expiration to put anything on.
So you mean an August trade, not July?
August, right. Yeah, I'm out of July.
I actually put on a small bearish butterfly today in August. It was centered at the 1250 strikes, a 3-lot. I put it in well below what the mid was, and it eventually hit me. So right now I'm at break even on it. So I just thought it was a good opportunity to put on something relatively small in size for me that I'm comfortable with, and the market just ran up 40 plus points. So I thought it was a good opportunity.
I'm looking at that. Yeah, I'm looking at the chart, and you know, this rally in the Russell to me looks pretty strong. And the way volatility has come in, you know, the volatility players seem to be making a pretty strong statement about the market. You know, unless they're just completely wrong, it looks like this rally could have some legs.
Yeah, that's absolutely true, and I think you know, because I have a lot of M3 type positions on, and I'm okay to the upside on overall my portfolio. I wanted to get a little bit of downside protection, if you will. That's still manageable if the market continues to run up. Being that the you know, my reference point is I have butterflies at 1250 on this, so 1270 to 1290 to 1310 is going to get me scaled in. Is the rut going to go above 1310? Sure it can. I'm going to bet it's not going to.
Yeah, I would agree with that, but it sure looks like it wants to test that level again.
It might. It very well, you know, get up into the mid 1290s where it was. There's certainly that possibility, and that will get me scaled in.
I'm sorry, I missed that. What do you mean scaled in?
No, my first tranche of my bearish butterfly, and add
okay.
Yeah, so
right,
so
you'll just add a second position.
Exactly. Yep.
Gets to a certain point. Yeah.
Yep.
Getting fully scaled into that trade always scares me a little, because that's when you have the maximum losses if you're wrong.
That's absolutely right. One of the things I will typically do is I scale into those. As the market runs up and you're getting closer to expiration, sometimes instead of using 50-point butterflies, I'll use a broken wing on the upside to 40 or 30, depending upon what the cost to do that is, just to take up some of that additional upside risk.
If I'm not sure about the upside, sometimes I'll just stay in 2 butterflies and just, you know, roll them up when you hit that add point. You know, unless it's a situation where the Russell's up, you know, 75, 80 points already, and then the upside is not quite so scary.
Yeah, and the other thing I'll do is exactly that. I won't be hesitant to do a roll-up if my Delta Theta tell me to. I trade it like that. I play by those rules. I don't ignore that. So rolling my 1250 to 1270s would probably happen before it got to 1290.
You know, it's hard to believe John used to trade that without the Delta Theta rules.
Oh yeah, that was could get really scary on a run-up.
Yeah, I think I shared last week that I found my John Locke did a presentation at the 2009 Sheridan reunion. We were all just shaking our heads, you know. It was just scary what he was doing.
The Russell right now seems like it would be a good candidate for a rock trade.
Yeah, the rocks will go on next week since we have a five-week cycle. Theoretically.
I think if the rock got to 1290 by next week, that would be ideal for a rock.
Ray, what do you think? You're kind of our rock expert in the group.
No comment.
Come on.
Ray, do you have any time frame you're looking to get into your next trade, or are you just flat for vacation, or what
I've
do you think?
been flat for some medical reasons.
Okay. Fair enough. Well, let's see. I guess I put on a weird ore. If you want to see it, I can share that.
Did you get it on when the balls were up, Tom?
No, I waited too long.
Darn.
I didn't want to wait too long because I wanted to get a trade on. So maybe it'll bite me, but the thing's up already. So let me know when you can see the screen.
I can
What's that calendar doing in there?
Okay, so here's what the trade looks like. It's, I was looking at the market, thought it was going to be going higher, so I wanted to get something that had no risk on the upside. I think when I put this on, which one is this? Got to figure out, I've got 3 different trades here. So I started this yesterday, I guess, and it's already up money, which is nice. Yeah, it's just kind of Dan Harvey's modified weirdo. If you look at those guidelines, he says to put it on a down day, but it was, it's getting close to 30 days expiration, so I wanted to get something up and, make a little money if the market was going up like I thought it would. So that's where it is. I didn't put the call calendar on. That might have helped more, but basically no risk on the upside, so I'm worried about it.
So Dan is using a calendar in that configuration now?
Yeah, if you go to the website, the library, and you search for Dan, or maybe if there's a PDF attachment. Where is it? Here it is. Dan Harvey's Weirdo Variant Guidelines. I don't know if you've seen this, but these start 30 to 35 days. I didn't want to wait too long because I was kind of running out of that window, and it wasn't a down day. It had gone down a little bit already, but it was still up high enough. I felt, it's still a good time to put the trade on. And then, here are the rules, but he's doing a slightly out of the money put calendar, and optionally a short call or call credit spread. Didn't do that. And optionally call calendar. So I elected not to do those. Probably smart because the market keeps going up. But these are the rules that Dan had, not too long ago for his modified weird order. that looks like. I also have Kevlar on. Even though it's outside the tent, but they still 38 days ago, flat. And if the market does pull back, it should make a little bit of money. If I need to, I can raise this up pretty easily. But even in 19 days, it should be profitable even if the market just sits where it is. So there's nothing really to do with this unless it really runs up to say 20, 30 area. And then Bhaskar asked, adding the calendar. Oh, just to, on the Weirdor, just to cut the Vega a little bit. So if you don't have the calendar, it would look like this. So your Vega is, quite a bit more. Delta is not too different, but if you compare the risk graphs, that's without the calendars and with. You overlay them. You zoom in a little bit. Another way to zoom, too, you can just grab this price thing down at the bottom instead of right-clicking, changing the price interval. So that's with or without the calendar. Not too different at the current area where it's at, but, a little bit of volatility help if the volatility were to pop up there. That's why Dan uses it. Plus, it also bases or okay, and then the other one's just a vertical in September. Bill Gary put the one on and thought, yeah, it's good rationale, so that's not much to a vertical, it's basic. So just put that on today.
It's just a bearish sentiment.
Yeah, I think if I look at all of them together, it looks like this. So it actually looks pretty nice. It's nice and flat overall if you combine all the positions together. So kind of manage it by the Greeks, if you will. It's got a nice expected return as well. So it doesn't matter too much if the market wiggles around. Pretty flat delta, decent data. Going okay.
Looks good.
So that's what I've got on. Anybody else has something they want to share or talk to?
Hi, Tom. I'm looking at a chart of the SPX, and we have a bottom at 2044, and we have a little gap between 2082 and 2085. And if that gap is a measuring gap, then the SPX should be targeting 2120.
Okay, so that's another 15 points or so to the upside.
It would also be another lower high, which is kind of interesting.
Here, I can share a screen just so we can get a visual on that. The SPX. Okay, so here's the chart we're talking about.
Right. You can see that gap 2 days ago.
Yep, right there.
So from the bottom at 2044, it's the middle of the gap would be 2082, so that's 38 points. And then another 38 points from 2082 would be 2120 exactly.
Okay. It doesn't hurt the free traders if we go up a little bit more, like Curtis. Maybe we get a little pullback before it goes up that high, right?
I know you all are working on that for me.
Yep. Jim Riggio just tried to call. All right, so anything else, the market or trade you want to talk about? adjustments you're considering, lessons you learned in recent trades. Well, maybe a good time to wrap up. We're approaching an hour anyway. Those of you that were in John Locke's APM thing, you should have gotten an email for Curtis's meeting tomorrow. If not, just contact Curtis, and he can get you the information for that meeting.
Is that for people who attended the seminar, or for people who bought the course?
Both, really. If you bought the APM course, you need to tell Sherry to notify us, and we will put you in the list.
Okay, because yeah, I did buy the course. I have the the email from them when I bought it, and I haven't heard anything.
Okay, well, I also work with Sherry, so I can get an updated list and add you, Andrew.
Tom, could you add me also? Because I also did the same thing. I haven't got an email from Sherry, though.
So,
Yeah,
Tom, you bought it also?
Yes.
Okay.
Tom, can you add me as well?
Yeah, I bought it on July 3rd.
I think I did the same thing. I bought it before the promotion was up, so I think it was the 3rd.
Right, the discount.
Very good. I'll make sure that everybody who bought it has access to that. And if you don't get an email, check your spam filters or contact Curtis. But the meeting's tomorrow at noon Eastern.
Yeah, I'll email Sherry and get an updated list on people who have bought the thing, so that, and then I'll email you. Okay? Or I'll get Sherry to contact you.
Yeah. All right, everyone. Thanks for another good meeting. Really appreciate it, and I hope everything goes well with the July expiration if you're still in. I think Curtis gets his pullback.
Thanks, Betty.
We're rooting for you.
Thanks.
All right, everyone. We'll see you next week.
Thank you.
Take care, all.
Thanks. Bye.